Hello, this is Huskins, your Forex mentor. Welcome to the daily review of March 22nd and the preview of March 24th and 25th, your daily dose of events that shape the Forex markets. We have a very interesting video for you today. Let's start with the quote. The thought for the day: storms make trees take deeper roots. Isn't that such a fantastic quote by Dolly Parton? We need to engrave that in our hearts and in our minds that when we face with adversity, we just need to take deeper roots. We need to become like trees and hold our ground. Let's look at the current results of March 2013. Um, Look at the amount of trades. Total trade plans 21, trades taken were 15, so there were 6 no trades, so 15 plus 6 is 21, out of which we won 13 trades and we lost none of that. So we've had 100% track record so far this month. Now, if for people who do not know, I'll show you how to get this on our or from FXJust website. So go to fxjust.com. I'll just show that to you, and then you click on current results, and that's it. This is the same chart which I had pulled up. You want to see detailed the kind of trades which caused these results up here, and the amount of pips we made in them. Results for February. So all the results are made available to you. Now let's look at the major economic events. The U.S. economic indicators point upwards. The economy appears to be on track for further gains in the next 3 to 6 months. Now, this was according to the leading indicators, and that why am I telling you this? Because that's what the mentality of the market is going to be. So we are going to expect, a rally, a pre-news rally before major news events, and that's what the expectations are. And when the ground shifts and turns away from such an expectation, I'll let you know so that we can adjust our strategy accordingly. Now, the stocks are making up for most of yesterday's losses, and as this week winds down, at last check, the Dow was back within 3 points of 14,500. Now, there were no major economic numbers or major earning reports in view for today. Something very important I'd like to share with you: tips negative yield streak continues. Now, what are tips? Tips are 10-year inflation index notes. Basically, they're bonds which are indexed to the inflation, um, and they fetch a negative yield at an auction the eighth straight time that something like this happened. If I've lost you, this is what it means. Um, Bonds are, you are loaning money to the government. Let's say if I'm buying a bond from USA, I'm loaning money to the government. Now, what do I need when I loan money? I need some kind of interest, some or return on that particular money. So I'm loaning money, and normally I would at least want my money to move in a bigger fashion than at least the inflation rate. But in this particular case, um, the inflation rate is higher. The official inflation rate, let me reiterate my statement. The official inflation rate is higher than the yield which is available on the bonds. Now, why is something like this? I mean, in free market environment, something like this cannot exist. Nobody in the sane mind is going to give someone else money to get a negative return out of it. But why is this happening is because of the Fed policy. Because on one hand, the Fed itself is buying these bonds. So basically, when you buy bonds, the yield on the bonds goes down. And whereas the Fed buying bonds to put in liquidity in the market, that's the way the printing press prints more money and injects liquidity into the market. Why would they do that? For a simple reason is that if the yields on the bonds are attractive, the participants will or the investors will invest money in the bonds and take them out of the stock market, and the stock market would crash. So this is to prevent a stock market crash. Now, while I was on vacation, there was a lot of talk on the Cyprus issue. Now, I'd like to explain to you what exactly is the Cyprus issue. Now, Cyprus is this small, teeny weeny country. When you look at this big globe out here, teeny weeny country in Europe. All right. Now, what actually happened was Cyprus is known for its uh, how do you put it, for its secure banking sector. It is basically a safe haven for Russian money. This is Russia out here, and Cyprus is a safe haven, safe tax haven for Russian money. And how did Cyprus attract a lot of this Russian money? By providing about 7% interest on the money. That's how money from here, some of it from India, maybe from the Middle East, all went into Cyprus. Not from the Middle East so much, because Middle East does not have much of income tax, but any illicit money, it seems, made its way into Cyprus. Now, Cyprus, the amount of money inside Cyprus is about 6 times its own GDP. So there's a whole lot of outside money into Cyprus. Now, given that state, one would assume that the banks in Cyprus are the strongest, because they have the most amount of money coming in. But um, again, putting it very plainly, the banks did not do a very good job, and they lost a lot of money, and their balance sheets now have, or not now, but last year had 17 billion dollar gaping hole. Now, out of which the Russian government took care of about 2 billion euros. It took care of, and it has now a gaping hole of about 15.5 billion euros. The numbers are not all that important, but the storyline is very important. Now, uh, the Cyprus government applied for a European bailout, and the European Union said that we'll give you a bailout of 10 billion euros. You need to come up with 5.5 billion euros. Now, you need to understand that Cyprus does not have that 5.5 billion euros. Now, how are you going to get access uh, to creating 5.5 billion euros? And the government proposed a plan. The plan was that anybody who has less than 100,000 euros in a Cyprus account would be levied a tax of 6%. That means if you have 99,000 euros, you'd end up paying, about $5,900. And if you have about 100,000 euros, you would end up paying 10% of your deposit as a one-time tax. Now, this is absolutely stealing, and the people took and protested against this particular kind of proposal, and this proposal was voted down. That means the parliament uh, is at its current juncture not going ahead with this proposal of making the savers pay for the bailout. So what happened was that just the idea that this proposal might actually come in will now, in my opinion, set the entire institutions have lost their credibility. The days of Cyprus being a financial hub is over now, and a lot of people want to withdraw their money. But what is going to happen now is that the banks have officially been closed and they'll reopen on Tuesday. So when it opens, or if it ever opens, it'll be interesting to see how the markets react to this particular news. Now, the Cyprus issue is far bigger than what the market believes, and this is why. All right. Uh, a plan is actually getting leaked that uninsured depositors of the Cyprus Popular Bank could lose up to 40% of their savings. Now, there are two kinds of account holders. One are the insured ones, and the other one are the uninsured ones. The international depositors won't know when or if they'll regain access to the accounts. Liquid demand deposits may be forcibly converted into term deposits. That means that you cannot withdraw your money. If the depositors need liquidity to compensate for their locked out Cyprus accounts, they'll need to sell assets elsewhere. Now, this is hardly a bullish development, but the world is ignoring it. And I'll tell you why this is a big issue. Now, we see that Ben Bernanke, now who's the Ben Bernanke? The federal chairman, was pressed on this week on whether such a scenario could unfold in the United States of America. This was just a simple question, but this is what he said. It is extremely unlikely. Now, remember these words, extremely unlikely. From this, we can deduce that Bernanke has what you call a likelihood scale. Now, if you recall, in July 2005, in an interview with Maria, in which he categorized a national-wide drop in housing prices as pretty unlikely. This is extremely unlikely, and it was pretty unlikely at that time. So, why is this such a big issue? The issue is that someone needs to pay for the bailout. Everyone's looking at anybody who has money, and when um, when people lose faith in the banking sector, that's when the real chaos starts happening. There was a saying that hold your money under the mattress, but instead of holding money which will be eaten away through inflation, I'd rather hold gold under the mattress, physical gold. But the entire Western world will collapse if people stop believing that their accounts are safe in the bank. So this is a far bigger issue than what the market believes. Now let us look at the preview for next week. This is the preview for next week. On Sunday we'll have no trades, but no, actually not that we'll not have trade. We'll have the market gap trade. And then we do not have a trade plan on a Monday, so Monday will be a very light day. We have a revised trade plan for the core durable goods sales and the new home sales. Be in tune for that. Then we have it's a light trading week next week, but The major news to be on a lookout for is what happens in Cyprus and what whether the risk aversion sentiment starts seeping in. I don't think so at this moment. The market's going to just brush it off, but all of this is going to start off into a snowball effect. From a small country like Cyprus, it has the potential of gardening into something really massive, and we need to keep our eyes open to that. So, adios till Monday when I'll talk to you again. Thank you. Have a great day, and you can write to me anytime. I'd love to hear your comments and your feedback. Bye for now.